Primarily, if you just look at it from a revenue perspective, the midcaps have grown way faster over the last 2 years. So, Infosys CEO Nitin Rakesh, in fact, made this comment stating that the tier one providers have gotten a little stale. Not just is there intensified competition amongst the midcaps, but they're also stealing away whatever business or whatever opportunities there were for the large caps. It gives them a clear entry into the market. They don't need to build teams from ground up. The top 5 IT outsourcers have been slow hirers. The GCCs have been kind of offsetting this low hiring by the IT peers. Now, what's the benefit? One, graduates from India's engineering colleges have something to look forward to. In case they do not get a job at, say, a TCS or an Infosys or a Wipro, higher skills, more specializations, niche roles are what the GCCs are after rather than the bulk hiring done by a lot of the Indian IT outsourcers. So the more skilled you are, the more courses you've done, the more certifications you've done, the higher the chances of landing a job, not just with a higher, fatter pay package, but also at a reputed client or a reputed multinational firm.
Hello and welcome. You're watching Mint and I'm Sana Marwaha. There seems to be a shift taking place in India's IT landscape. For the last 2 consecutive years, India's mid sized IT firms have grown faster than their larger peers. And now they are publicly saying one thing, that the top tech service providers seem to be losing their mojo. Firms like Coforge, Persistent, and others have an edge as compared to their larger rivals like TCS, Infosys, HCLTech, Wipro, and Tech Mahindra. Why? Because they believe that they have one thing going for them that their bigger rivals don't, and that is agility. And this is especially important right now in the age of AI. So, what exactly is happening in this space, and do they seem to be right about this? Because if yes, then the legacy companies may have to watch out. To discuss this, I'm joined by my colleague Jas Bardia, who's been tracking these developments closely and writing about it in Mint. Hi, Jas. Thank you so much for joining me here today.
Thank you, Sana, for having me. It's a pleasure seeing you again,
All
and
right.
can't wait to get this started.
Right. So, first of all, what has been this change in the last 2 years? Is it so significant that the mid-cap firms' management seem to be pretty confident to say publicly that their customers are fatigued with the tier one IT service providers?
Primarily, if you just look at it from a revenue perspective, the mid caps have grown way faster over the last 2 years. This can be attributed to multiple factors, including smaller teams, more adaptability to AI, and also the fact that they've been winning a lot of these deals from the larger incumbents, from the larger peers. So, if we were to just look at the mid caps in the last year or so, there have been at least 4 changes in Indian IT's overall pecking order, courtesy the mid caps. So it's not just an interesting prospect; it's also the emergence of uh, a new player, a new sort of a cohort in the ranks of Indian ITs, and this will also give some competition to the large caps who are chasing bigger deals, who are chasing those mega deals, and who want their revenue to increase at a time of macroeconomic uncertainty.
All right. And well, you say that analysts that you've spoken to, they are saying that the larger IT vendors are stuck because of certain things like legacy systems and processes. And that's why they are unable to kind of adapt to the newer technology. And this is especially important, of course, because AI is now taking center stage, right? So, can you expand on that a little more and explain what exactly these analysts are saying and where the issues lie here?
Now, let me just give you two quick examples of what really happened in the April to June quarter. And we're only going to refer to what the management has said more than what the analysts are referring to give you what what has been coming out from the horse's mouth. So, Emphasis CEO Nitin Rakesh, in fact, made this comment stating that the tier one providers have gotten a little stale because they have not really invested to keep up with the level of transformation needed or with the intimacy that clients now require. Similarly, if you look at First Source Solutions, Ritesh Adnani, now, mind you, First Source made its debut in Indian IT's 1 billion club very recently. I think it was the latest entrant into Indian IT's 1 billion club. Even he stated something on similar lines that, when it comes to our larger peers, we're not restrained by excessive bureaucracy or legacy operations. So this is allowing them to capitalize on AI driven deals and even emerging industry shifts. Now, what these two people are saying is just a reflection of a broader trend in the industry that a lot of mid-cap IT service providers want to steal the launch from the larger peers. They're willing on focusing more on specializations, on tech advancements, and tailoring solutions specifically for the client's needs. Something that clients have a grouse with the large caps for, because it's tougher to do it in a large cap. Why is it tougher to do it in a large cap? Simply because they are larger in size. Not just do they have more headcount, but they also have fixed functions and a very hierarchical structure, which is difficult to kind of change for a client to two clients per se. Again, clear example in terms of headcount. If you look at the mid caps, that is from the 6 to 12, um, most of them have between 6,000 to 8,000 employees, as compared with the large caps whose headcount starts with a lakh employees. So here it's not just about agility, it's also about tailoring the needs, tailoring your services and your offerings to what the client really wants. Now, again, I think the best way to leave from here would be if I could just give you a little hint on the growth. Um, just looking at the Q1 dollar figures, the large caps have not reported more than 4.5% growth sequentially. Whereas if you look at the mid cap companies, their growth has far exceeded the top five peers. Coforge and Sonata Software, a case and example, while Coforge's revenue grew 10% to 442 million in the first quarter, Sonata's revenue has jumped 15% to 347 million. Yes, the bases are lower, but are they grabbing whatever opportunities coming in the way? Analysts say yes.
All right. So you did mention something about this before, but could you give us a little more clarity in terms of numbers as to how much mid-cap IT firms are actually taking, chunks out of their larger peers' client base now? Like, is this actually happening in terms of numbers?
While we do not have any data that quantifies the value of deals that the mid caps have won from the larger peers, all we do have is the revenue figures. And we can also say by the fact that the revenue numbers have been, the growth numbers have been double digits, not just last year, but in the last 2 years. And we see that trend continuing even for this fiscal, that is in the first quarter. Most analysts are gung ho about the mid cap stocks because one, they're growing and they're hiring a lot of people. Second, their partnership with GCCs. Third, their AI advancements, and also the fact that they are trying to go one up, not just with in comparison with the mid caps, but also against their peers. Just this quarter, if we look at just the previous quarter, Coforge jumped to the seventh spot, whereas we got a new 11th largest IT services company in the form of Sonata Software, which entered the 1 billion club last year. Now, Sonata replaced LTTS, which was the only mid-cap IT services firms to report a decline in revenue, whereas Coforge has been on a roll from the ninth to eighth and now to the seventh. So this just tells us that not just is there intensified competition amongst the mid-caps, but they're also stealing away whatever business or whatever opportunities there were for the large caps.
All right. And well, you mentioned something about GCCs right now, and you have written that the mid-sized firms are betting big on GCCs. So, what exactly is this partnership all about, and how does that help them kind of, outpace the larger companies who they are competing with?
So, what the larger IT service providers have done, and I'm not saying the mid caps have not done it, but what most of these guys have done is that they've set up internal teams, they've set up internal business units to work with GCCs. And basically, how this works is that they set up teams for their clients. They run the GCC for, say, a period of 2 years or 3 years. And then after a certain amount of time, they transfer the leadership, they transfer the whole operation back to the client, in which case can be a retailer, it can be a bank, it can be an airline manufacturer, any of them. So what the mid caps have here done is they have partnered with these GCC advisory firms. So rather than just depending on setting up internal teams to kind of put up shop for their clients, what they've done is they've acquired these GCC firms. GCC advisory firms basically set up GCCs for their clients. So I think Emphasis even said this, that rather than building up a team internally, we are dependent on a lot of these GCC advisory firms to do the job for us. That by doing this, it gives them a clear entry into the market. They don't need to build teams from ground up. Case and example, Emphasis invested 4 million in AOCA, which is a US-based GCC advisory firm, and this was for a 26% stake. On the other hand, Hexaware acquired SMC Squared, a similar firm, for $120 million. This was purely to tap the GCC potential because a lot of clients do not want to just plain outsource their work to IT service providers, but they want to handle the tech teams, the tech roles internally themselves. Um, Also, because we are on the point of GCCs, another mid-cap IT service provider said that high attrition is because of the GCCs sprouting up. So I think it was persistent Sandeep Kalra who mentioned that the higher attrition may be because of GCCs becoming more active, product companies setting up shops here, and even the likes of the large banks, kind of setting up their own tech units here.
Right. Do you mean that there are more options for people? Is that what you're saying?
Precisely.
For
Now,
employees? Okay.
also, precisely, I think you've hit the nail on its head. What this also does is because IT outsourcers, the top five IT outsourcers have been slow hirers, the GCCs have been kind of offsetting this low hiring by the IT peers. Now, what's the benefit? One, graduates from India's engineering colleges have something to look forward to in case they do not get a job at, say, a TCS or an Infosys or a Wipro. Also, the fact that GCCs have traditionally been higher paymasters than the IT service providers. So, not just are they going to get a job, they might just have a chance of getting a higher job. But needless to say, as with anything in life, this comes with a caveat. Higher skills, more specializations, niche roles are what the GCCs are after rather than the bulk hiring done by a lot of the Indian IT outsourcers. So the more skilled you are, the more courses you've done, the more certifications you've done, the higher the chances of landing a job, not just with a higher, fatter pay package, but also at a reputed client or a reputed multinational firm.
Right, right. Okay, that makes sense. And also, there have been some leadership reshuffles as well amid the mid-cap firms in the last few weeks, quite a few, in fact. So, where does this kind of come in? Like, are they trying to get ahead while they have the lead and quickly change their systems, etc.?
Now, in our conversation with analysts, one theme has emerged clear that mid caps are not going to stop their growth juggernaut anytime soon. Because of this, they have been hiring a lot of people. If you look at just the last 1 month or so, there have been at least a dozen leadership changes at CXO levels, at leadership levels, at vertical head levels, in at least half a dozen or six mid cap IT services firms. Now, Persistent leads this with at least four changes, the latest being that of a new COO for its tech practice. And there are various other roles, various other companies like in roles of finance, in roles of HR, in roles of delivery that multiple IT outsourcers, including Coforge, LTI Mindtree, Hexaware, and LTTSs, have adopted.
All right, and well, but despite this growth, some brokerages seem to have cut targets for IT firms. Of course, this is across the pack, it's not just the mid caps. But is that because of the general cautious environment, geopolitical tariffs, etc.?
Right. A lot of this can be attributed to macroeconomic uncertainty. Now, whenever there is a macroeconomic uncertainty, clients really pull back their tech spending. They do not plow in as much money on their tech projects as they do for running their daily business. So that is one of the reasons why IT service outsourcers do not really see a steady stream of revenue coming in. Also, another reason is because of this macroeconomic uncertainty, clients are not just getting lower business, they also have to hire lesser. They'll have to reduce their hiring probably. And I'm not saying this, a lot of the analysts, a lot of the IT services CEOs have been saying this too, that the hiring targets might not be as ambitious as they probably envisaged in the past. This is also because when there are fewer projects coming in, you need fewer people, lesser headcount to manage the projects. So more the projects, more the people required, and vice versa.
Right. And what does this overall mean for India's IT landscape? Like, is there some big shift happening that people need to kind of take cognizance of?
AI is what we hear to be the big shift. But again, as always, well, there have been multiple instances of people, of brokerages writing off India's largest IT outsourcers. We shouldn't forget that they are the largest employers, that they still have most number of companies getting beyond 1 billion than in any other sector. So while there are green shoots of optimism, it also comes with a lot of structural changes that AI and automation is bringing about. So it really depends on companies internally, how they can restructure their workforce, how they can restructure their operations, and what more can they offer to the clients.
All right. Well, thank you so much, Just, for joining us and giving us these insights today.
Thank you, sir.